Welcome to BigONE Weekly News Update. I'm Gavin. Crypto markets pulled back last week as geopolitical tensions and macro uncertainty weighed on risk sentiment. While prices declined alongside broader markets, key regulatory and institutional developments continued to support the long-term outlook. Crypto retreats as risk assets slide. Bitcoin briefly hit $76,000 before falling nearly 7% to around $67,850. Ethereum dropped about 5.7% to $2,050, and Solana fell 6.6% to $86. The decline came as global risk assets posted a fourth straight week of losses amid escalating U.S. Iran tensions. U.S. equities extended their longest losing streak in a year, Treasury yields rose, and oil edged higher. Oil remains the key trigger. Any ceasefire could spark a rebound, while further escalation may drive deeper risk off. The Fed stays on hold, signals hawkishness. The Federal Reserve held rates steady but reinforced a hawkish stance. Fewer rate cuts are now expected, with officials emphasizing that easing will not begin until inflation improves. The Fed also raised long-term rate and 2026 growth forecasts, while flagging geopolitical risks. Markets are now pricing in delayed rate cuts. Strategy doubles down on Bitcoin. Strategy bought 22,337 BTC last week for $1.57 billion, its largest purchase of 2026, bringing total holdings to over 761,000 BTC. For the first time, the purchase was mainly funded through its SDRC preferred stock, which offers 11.5% yield and enables ongoing capital raising tied to Bitcoin accumulation. Risks behind the SDRC model. SDRC provides steady income but amplifies downside during BTC declines. The model relies on SDRC trading near its $100 par value and sustained investor confidence, both vulnerable in weak markets. Strategy's $2.25 billion cash reserve offers a buffer covering roughly 2 years of dividends. Liquidity tightens, safe havens lead. Geopolitical stress continues to push capital into oil and the US dollar, tightening global liquidity. Higher energy costs reduce available capital for investment. However, U.S. liquidity remains supported by Treasury injections ahead of the April tax season. Regulatory clarity marks a turning point. The SEC and CFTC introduced a formal framework classifying digital assets into 5 categories, with only digital securities falling under securities law. This marks a shift toward a more pragmatic regulatory stance and strengthens the foundation for institutional adoption. Though policymakers are still pushing to codify these rules into law, TradFi moves on-chain. S&P Dow Jones licensed its index to launch the first official on-chain S&P 500 perpetual futures contract. The product enables 24/7 trading, USDC settlement, and high leverage, attracting over $100 million in volume within 24 hours. Outlook. Markets remain driven by geopolitics, Fed policy, and oil prices. While short-term volatility persists, growing regulatory clarity and institutional adoption continue to reinforce crypto's long-term trajectory. Join BigONE today and take advantage of the growing cryptocurrency market.